Hello, hello everyone. Okay, yeah, welcome to the Asia webinar series. Today, we will take a uh, look at the recent movements in oil prices and the key macroeconomic data that have had a major impact on oil prices. And we will also dive into the current state of the US economy and the Fed's rate path and some key oil related data. And in addition, we will choose some of the instruments which showed high volatility in the market over the past week, including the oil prices, and we will also conduct a technical analysis for this as well. Before we start the session, I would like to notice some of our disclaimer that this presentation is for information purposes only, and any information relating to investments should not be considered as advice or endorsement. And any point of view is the presenter's personal opinion only and does not reflect the views of Exness. Here's today's webinar agenda. First, we will go over the key macroeconomic events that have caused both major and minor fluctuations in the market. And we will focus on US inflation and employment data and the resolution of major geopolitical risks that are shaping the market and the recovery of the Chinese economy. And in the second part, we will take a closer look at oil-related data that directly impact oil price volatility. And by analyzing US oil inventories and some kind of supply data, we will assess the current state of the oil market and its potential future movements. And finally, we will apply what we've covered so far to conduct technical analysis on various key instruments, including the oil prices. So, what are the biggest factor that will shape where oil prices go next? And one major thing to keep an eye on is the ceasefire negotiation between Russia and Ukraine, which is the US is trying to do the broker role. And remember, oil prices uh, shut up when the war broke out. So if a peace deal happens, we could see those gains will completely erased. And on top of that, the US is likely to ease energy sanctions on Russia as well, which means more Russian oil hitting the market. And if that happens, we could see oil prices drop even further. And another big factor, what the Fed does with its interest rates. And lately, there's been talk of inflation going back up, which makes it less likely that the Fed will cut the interest rates anytime soon. And with Trump's tariff policies expected to push inflation even higher, the chances of a rate cut should shrink even more. But here's the flip side. If the US economy weakens or the job market struggles, the Fed might have to cut the interest rates to keep things from getting worse, even if inflation is still an issue. So there are two options, two scenarios. Number one, if the Fed holds the interest rate steady, the dollar stays strong, and that usually pushes oil prices lower. And in scenario two, if the Fed cuts the interest rates, the dollar could weaken which would put downward pressure, upward pressure on oil prices. And then there's last one here in OPEC Plus ramping up production. Starting in April, they are officially ending voluntary production cuts, which means more oil supply will be in the market. And if they keep increasing production over time, oil prices could take another hit and drop even further. So based on these three cases, Starting from the next slide, we will take a glance look at each fundamentals and macroeconomics and what kind of fundamental events does affect the oil prices. Now, let's dive into some key economic data with a primary focus on US figures. And that said, we will also take a look at uh, uh, other major events that have influenced oil prices, including the developments, recovery in China, and the resolution of geopolitical risks between Ukraine and Russia. Concerns that the Trump administration's tariff policies could ultimately push US inflation back up led to significant price fluctuation in risky assets usually. And as a result, the market was very highly focused on the US inflation data. And the February CPI reports provided some kind of relief as inflation slowed more than expected. And headline CPI rose 2.8% compared to the previous year, down from 3% in the previous month, and below the 2.9% consensus estimate. And this kind of data reignited expectations for the Fed rate cuts and gave some kind of investors who had previously sold off all the risky assets give some opportunity to buy back in the buy the deep in the lower levels. And it wasn't just about the headline CPI, and you can see from here the core CPI also here in the blue graph came in lower than expected, rising 3.1% year over year, which was below both the prior data and the market consensus. However, it is very important to note that the February inflation data, this one, did not yet reflect the full impact of Trump's tariff policies. And the market anticipate that this tariff will drive up the import prices as soon as possible and ultimately pushing overall inflation higher. And another key point to note is the gradual slowdown in the US domestic demand. And high interest rates and the policy uncertainty are waiting on both households and the businesses. And this growing market concern is clearly reflected in the February Small Business Optimism Index, which dropped 2.1 points from the previous month to 100.7, as you can see from here. And 7 out of 10 sub indices weakened compared to the previous month. Notably, expectations for the economic improvement and the revenue growth uh, showed a significant decline, and also the hiring plans of the companies also turned more pessimistic. Given that the Trump administration's aggressive tariff policies are now being fully implemented, trade tensions could escalate further in March, and it could increase uncertainty in the US economy. And this could put additional pressure on small business confidence, and it could lead to the weaker investments and also with the weaker hiring decisions of the company. The gradual slowdown in the US employment data has become a major concern for the investor. And while the February NFP rebounded compared to the previous month, the rise in the overall unemployment rate from 4 to 4.1% has raised some kind of red flags to the market and also to the investor sentiment. And a key factor behind this increase was the 0.2 percent point drop in the labor force participation rates, along with the simultaneous decline in both the labor force and the number of employed individuals. And another worrying sign was the U6 unemployment rate, which jumped to 8%. And unlike the standard employment rate, as you can see from here in the left graph, the U6 unemployment rate usually measures uh, includes the individual who wants a job but haven't actively searched in the past 4 weeks due to poor labor market conditions in the United States. And because it provides a more comprehensive view of the US labor market's true health, this sharp increase, I mean, the sharp increase of the U6 unemployment rate is particularly very concerning data for all the investors. So for investors and for all the traders, this is being interpreted as a signal that the US labor market may have peaked already and is now entering a downturn. So, as concerns over weakening U.S. demand and employment continue to grow, as we already saw in the previous slides, Wall Street has been revising its first quarter GDP. I mean, the first quarter of this year's GDP growth, the expectations and estimates. And Goldman Sachs said that the potential impact of Trump's tariff policies warned that US economic growth could take a 0.8 percentage point hit. So they slashed the real US GDP growth forecast for this year from 2.2% to 1.7%. And not only Goldman Sachs did this, and Morgan Stanley also revised its GDP growth estimates down by 0.4 percentage points and revised it to 1.5%. And here, on the right side, the Atlanta Fed has an even more negative outlook. And taking into account inflation and employment data, Atlanta Fed lowered the United States first quarter GDP growth projection to minus 2.4%. And it signals that the US economy could be in contraction phase. And this increasingly uh, pessimistic views on the US economy are directly weighing on oil prices itself. So declining demand from both businesses and with the households, combined with growing economic uncertainty, is dragging down the expectations for oil consumption, which means it could give some downward pressure on oil prices. So now, let's take a closer look at the oil-related data. And these figures have a direct impact on oil supply, which in turn drives the oil price volatility. And given their significance and importance, it is very important to analyze them carefully. Another key development to watch is that OPEC Plus has finally ended its voluntary oil production cuts. And major oil producing countries, including OPEC members, it includes Russia, Saudi Arabia, Oman, and have decided to begin ramping up the production. I mean, ramping up the oil production starting in April, and it raised concerns about increased oil supply in the market. And in a OPEC statements released after their monthly meeting on the 4th of March, OPEC Plus announced that they would increase production by 138,000 barrels per day starting from the 1st of April through voluntary adjustments. And previously, OPEC's production cuts had helped keep oil prices alleviated by limiting the oil supply, but this dynamic is now likely to change. For now, the market's main focus remains on the Trump trade policies, like and ongoing trade tensions with China, Mexico, Canada, and Europe, and the economic outlook in both the US and China. However, since OPEC Plus oil production decisions act as a direct trigger for oil supply adjustments, it is very important to closely monitor the future OPEC Plus statements and some kind of related news for the further developments. And this is also very important data. The last year's sharp rise in oil prices was largely driven by the geopolitical risks surrounding the Russia and the Ukraine war, the conflict. And the global oil supply took a major hit due to restrictions on Russian exports, which pushed the oil prices higher. And now there's growing speculation that this geopolitical concern could ease somehow following the Trump's intervention. And the former president has proposed a ceasefire between Russia and Ukraine while also working on relaxing energy sanctions on Russia. And given that Trump's tariff policies are expected to drive the inflation higher, it seems like Trump is using the lower prices as a counterbalance. And this suggests that the Trump administration will likely prioritize efforts to push oil prices down in the near term. So the Trump currently views the oil prices like around $70 per barrel as too high. So looking back at 2020, when he negotiated production cuts between Russia and Saudi Arabia to stabilize prices at $40 per barrel, his preferred range appears to be somewhere between 40 and 60. And this implies that now oil prices could decline further moving forward. Right now, the oil price is moving around $65 to $68, and it seems like Trump wants to push down the oil prices back to 40, between $60, around $50. However, it is important to note that not all factors are pointing toward lower oil prices. And while the US economy is showing signs of slowing down, China's economy gaining upward momentum on of the Chinese authorities' new stimulus measures. And President Xi Jinping recently affirmed that his commitment to boosting the consumer spending, and he emphasized like more than 27 times in a recent speech to raise the market expectations for stronger economic support. And as a result, China's equities have been rallying. As you can see from here, the Hang Seng Index has surged nearly 20% this year, while the CSI 300 index has jumped 24% over the past 6 months. And since China is the world's largest crude oil importer, a recovery in Chinese demand and some kind of renewed confidence in Chinese economy could lead to a rapid rebound in Chinese oil consumption. And this in turn could put upward pressure on global oil prices, and it could offset some of the recent downward trends on the oil prices as well. And as mentioned earlier, oil prices have been on a steady decline recently, and signals pointing to weaker US oil demand, such as economic uncertainty and risks from tariff policies, are adding downward pressure on oil prices. And currently, crude oil is trading around $65 per barrel, as I mentioned previously, and marking a 15% decline from this year's high. And now, if you look at the red line here, and this represents oil's long-term support level, which has been in place since mid 2021 or something, and consistently acting as a price floor like this here. And right now, oil price is approaching this critical support level, which is around $62 per barrel. And if this support level is broken to the downside, the next immediate target would likely be below the psychological support of $60 per barrel. And this makes it crucial to watch whether oil prices hold this support or break lower in the coming sessions. In the latter part, Lissing will tell you more about the technical analysis. Let's take a look at the US oil inventory level. So what's going on with US oil inventories lately? And since the start of the year, US commercial crude oil inventories have been rising steadily. And in simple terms, this means more oil is being supplied than consumed, and leading to a buildup in the storage and the inventory. And based on the basic supply and demand rules, when supply outpaces demand, prices tend to drop. And the API crude inventory data, as you can see from here in the right side, also shows a similar trend, confirming that stockpiles are continuing to increase. And if this trend keeps up, we could see further short-term pressure on oil prices. So for short-term oil traders, keeping an eye on weekly US crude inventory reports can be a useful strategy. And since these reports give very good insights into supply and demand imbalances, that can help traders make better informed trading decisions based on the oil movement. So if you are trading the oil, and remember, in the short term, please look at the US commercial oil inventories and also with the API oil stock change. And this is the data in a weekly basis, so you can just immediately uh, adopt this data to your trading strategies. And finally, let's take a look at where the Fed is headed with the interest rate path. As we discussed earlier, the Fed is walking a fine line between controlling the inflation and preventing an economic slowdown of the United States. And if inflation keeps climbing, the Fed will likely keep rates high to tighten the market liquidity. And on the other hand, if slowdown concerns grow significantly, the Fed may cut the interest rates to ease the market liquidity. And right now, though, the market seems to believe that the Fed is more focused on inflation than the economic growth itself. And investors are pretty confident that the Fed will hold the interest rate steady in the March monetary policy meeting. And they are also betting that the Fed won't be a rate cut in May as well. And the probability of the Fed keeping the interest rate unchanged in May has dropped from here. It has been changed a little, but it from 84.1% to 69% a month ago. But that's still a pretty strong consensus. And this tells us that the market is leaning more towards higher for longer interest rate scenario rather than expecting the immediate interest rate cuts. And since the Fed's interest rate decision directly impacts the dollar and also with the treasury yields, and these factors, I mean, the dollar and the yields influence the oil prices directly as well. So all of the oil traders should closely watch the upcoming Fed policy meeting starting March. Okay, so that wraps up my my sections. And now Listen will take over and walk us through the technical analysis based on everything we've covered so far. Thank you.
Thank you so much, Inky. Let me just share my screen and let's get to the technical analysis in a moment, right? So if you guys have any questions or any charts that you want us to take a look at, right, please just put it under the questions chat. Okay, so I hope that you guys can see the Exynos web terminal. So we will take a look at US oil, right, since that it's the fundamentals that we have covered for today. And then following that, if you guys have any other chart requests, just please feel free to put it in the questions chat. So like what Inky has mentioned, right, you can see that US oil on a higher time frame first. Right, let's take a look at it on the weekly. So if we're on the weekly time frame, just remove all these markings and we'll walk through the process together, right? So on the weekly time frame, what we have here is that you can see that US oil, it's sitting on some kind of support level, the 62 level that Inky has mentioned earlier, right? So this weekly support, it's more of a zone rather than just a specific level, right? You can see that this was an area that price has tested multiple times. So the major support level that was seen here, right? We saw how price tested this level in 2021 in August, and then again in 2023. And once again, we're back at this 62, 65 zone, right? We observed that move in September last year, and then price pushed up slightly, and now we're back to these levels again. So this is a support level, the 62 zone. That's what Inky mentioned. Right now, if you move down to the weekly, to the lower time frames. Right, so beyond that level, if price breaks and close below this, the next key support level we have would be this area here. You can see that this was a period of consolidation before price pushed higher, this area. So we saw how price consolidate before a move to the upside, right? And then following that, it also created this zone, right, where there was this gap formed. There was a move to the upside, but also left some imbalance here. Right, so for me, this is the next support zone. If price breaks and close below the 62 zone, right, we could see potential for a steeper drop towards this fair value gap on the weekly time frame. This is at about the 57, 58 level. And then beyond that, right, this area of consolidation, which is at about the 48 level, this zone. Right, so that's on the weekly time frame. Right, we also want to bear in mind that on the weekly, right, if you're on the weekly chart, that means that each candle, it takes a week to form, right? So you can see that each candle, the open, high, low closing price, it's taken from the price movement for that week itself. So this also means that that's less choppy, but at the same time, for price to push into these levels, right, it would also take quite a long time. Right, so this is on the weekly time frame, right? One other thing we also that's interesting to watch is that you can see that price has been consolidating. It's holding below this descending trend line, this area here. Right, we're seeing some kind of consolidation, the test of this zone, that support level that we've identified, the 62 zone, multiple times, right? You're seeing more of a consolidation, not really clear structure. In fact, it's more of sideways movement right now because of how prices are reacting. It tested this resistance area at about the 78 level. You can see that this resistance level was tested over here. And then again here, right? Here as well. And you're seeing that consolidation here, right? So price did not actually form lower swings, but instead it's just holding between this zone. So that's currently what we have on the weekly time frame. If you move down to the daily, right? So on the daily time frame, you can see this region here. So price tapped into the 65 region, the support level over here. And we're seeing that consolidation in within this zone. But what is also interesting to note is that even within this consolidation, we're not seeing any kind of market structure shift. Right, so recall in earlier sessions when we talk about how price pushed strongly to a support zone, for example, it's forming lower lows and lower highs, right? And you're seeing that structure play out even here as well. If I put these levels in a line chart or in close, right, you can see these areas, right? If I to just highlight the turning points, the highs and the lows, you can see that it's forming lower lows and lower highs, right? And there's no shift or change in that. So just looking at the daily, right, I'm looking at the break of this level, this high over here, given that this is the last high that we had. So this area, this high here at about the 70.50 level. So if price closes above this, right, then it could indicate potential for further gains towards the next high or the next level of liquidity. So this zone, right, 65 level, you can see that currently we're seeing that consolidation, nothing much, right? On the EMAs itself is a trend following indicator. So what this means is that when market is trending very strongly, right, for example, here, when price is in a strong or bearish move to the downside, it forms lower swings. Then EMA itself, you can see this red EMA here. the red EMA, which is also the EMA 78, would act as a resistance. So notice how many times price actually tested this zone, right, before it pushes lower. So in this case, you can see that when prices are consolidating, it's moving sideways, then we can see a lot of fluctuations around the EMA, right, price, like this area. You can see that price break above it, below it, so on and so forth. So taking a crossover when prices are consolidating, right, we'll get a lot of false signals. Okay, so not so much on the EMAs, right? Let's not focus on the EMAs, but rather take a look at this market structure here. So nothing much on the daily. We have identified this resistance turn support turn resistance zone here, which is about 70-50 region, this area. Right, and we want to take a look at the 4 hours time frame. So on the 4 hours time frame, again, like what we have mentioned, let me just hide this, right? So you can see on the 4 hours time frame, a clear period of consolidation here. You can see price moving sideways at this region, right? So you can see that support level being tested, price consolidating around that resistance, right? So this area, so we need to wait for price to break above this high on the 4 hours, 67.80 region, this zone, right? For indication of a further move to the upside. So this is the zone that I'll be watching on the lower time frames, this area. But also bearing in mind that oil prices are very much driven by fundamentals, right? As well as market sentiment. So oil itself, right, when global sentiment is weak, right, we observe the sell-off in the US stock markets recently, right? So this has also weakened the market sentiment. It also put pressure on oil prices, right? So that's another thing to watch, right? So apart from just the technicals, right, we also need to look at the general market sentiment and also how that impact oil prices. So in general, if market sentiment is weak or when there is a anticipation of a slowdown in demand, right, then naturally that would weigh on what oil prices, which is what we're seeing right now. So on the 4 hours time frame, where we have this this resistance here, 68 level, this zone, right? We observe how price interact with this zone. Are we seeing a break and close above this before potential to move higher to the next resistance target? Or if price continues to consolidate, we could see potential for a deeper push targeting this lows to the downside, right? So on the 4 hours, it's also a period of consolidation. We're not seeing a clear market structure shift at the moment, not on the 4 hours time frame, right? One other thing that's interesting to note, right? Not so much on the 4 hours, but if you move to the 1 hour or even the lower time frames, you can see this region, right? Price pushed higher. It's currently sitting on this potential resistance turn support zone, this area here. So on the 1 hour, on our 4 hours, it also coincides with a fair value gap. Right, so for those of you guys who are not familiar with this, right, fair value gap essentially just means that there is some kind of imbalance. We're seeing a strong move either to the upside or downside. And when you compare the candles, you can see that the wicks of these candles don't overlap. So the wicks of these candles, it's here. We have this candle as well. Oops. We have this candle as well as this candle. You can see that the highs of the first candle and the lows of the third candle didn't overlap, right? So right now, price did back into this zone and filled this gap. Okay, so this is on the 4 hours time frame. So if we do see on the lower time frames that price push higher and you have that market structure shift to the upside, then we could target this high over here, right, on the 4 hours. So that's on US oil. Right, so I hope that this is clear. And if you guys have any other questions, right, please feel free to put it in the chat as well. Okay, so that's on US oil. Another one that we would like to take a look at would be on gold. Right, so gold itself is a safe haven. So gold, usually moves in the opposite direction to market sentiment. Right, we observed the sell-off in US stocks recently, and you can see that this also coincides with the move up in gold prices. So in general, when there's a lot of uncertainty, right, especially around the constantly changing developments of the Trump policies, right, tariffs specifically, then you can see that that would also cause volatility in the market. It will also drive movement in safe haven assets, right? So that's on gold. So you can see on gold, right, something interesting to watch here on the higher time frames first. If we're on the daily, So you can see that price pushed into this record high, which is at about the 2,950 zone, right? Slightly shy of this area. So this zone here, right? Before we observe a slight retreat to the downside. So I'm talking about this move. Right? You can see that price pushed higher and then we saw a slight retreat to the downside here, right? And it also broke this low that we have on the daily time frame. But in general, the general trend on gold, right? If you take a look at it on the higher time frames, especially the weekly or the monthly, it has still been it's still in a strong uptrend, right? You can see the higher lows and higher highs that were being formed, right? So in general, right, the uptrend persists. We talk about market structure a lot, and we talk about when prices are in an uptrend, what happens is that generally the highs themselves can be used as profit targets, right? Or potential targets, whereas the lows in an uptrends are not generally broken. And you can observe that same pattern here, right? So what happened? Price formed higher lows and higher highs. And even if you take a look at it in terms of individual candles, you can see that this candle, these two candles broke the previous candle's high, right? So this area here, so it created a potential area of demand, which is this zone. And also what's interesting to note is that this also aligns with a weekly fair value gap, right? So recall I talk about three candles, and also if there is an imbalance, then we take a look at three candles and we observe the wicks of these candles. So if you take a look at these three candles over here, you can see that the third candle, which is this candle, and this candle, right? Observe that the wicks of this candle doesn't overlap. So it created an area or a gap here. Okay, so I hope that this is clear, right, in terms of this gap that's being formed just based on these three consecutive candles, right? And observe that when there is a strong move to the upside, created some kind of imbalance, price push it back down, fill the gap again before it continues higher. So that's on the weekly time frame. You can see this demand area here, right? And currently it is pushing back into testing this recent highs. If you move to the daily time frame, right, so on the daily time frame, what we observe is that price pushed to the downside. It pushed back into this area of demand on the weekly time frame, tap into this zone, right, and it just continues higher. Now on the daily, right, it's interesting to watch because this area where price consolidated before a move to the upside, it created a resistance, right? So if you observe higher lows and higher highs, price broke to the upside, we saw a retreat, and then it continues higher, and it closes above this high. So just from a daily perspective, you can see that this high created a potential area of demand over here, right? Because it was the previous resistance, price failed it. And also, if we observe again on the lower time frames, if you move down to the 4 hours time frame, you can again observe this gap that's being formed, right? So price consolidate and move to the downside, and then following that, we have a strong push to the upside. It also coincides with this fair value gap. So this area here, as well as the support. So for me, I think that if price continues to hold above this zone, this area, right, you can see again, these three candles, observing these three candles that we have over here, the high of the first candle and the low of the third candle, you can see that they don't overlap, right? So when we observe these three candles and price push or consolidate around here, right, if we do see a test of this zone, I'm again waiting for lower time frames if there's any shift in market structure before price pushes higher. Okay, so that's gold on the 4 hours time frame. If price continues its uptrend, we could see potential to challenge its all-time high, which is at about the 2,950 zone. Of course, beyond that, right, the next psychological resistance would be the 3,000 level. Discuss this level, right? It's a psychological number that we have here. Right? So if price continues to close above this, and it continues to show bullish market structure. So bullish market structure comes in forms of higher lows and higher highs. Right? So if it continues to show bullish market structure and also no sign of a break from this higher lows and higher highs that we're seeing here, right? Even if you observe them in a line chart, you see that as well. Right? Just marking out the turning points You can see higher lows and higher highs that were being formed. So if price continues its to sustain this uptrend, we could see it challenge the 2,950 level, which is also the record high. And of course, beyond that, if it closes above this, right, we could see this hold as a potential support and the price continue to the 3,000 level. One other thing that's interesting to note is that we talked about liquidity, right? So in general, right, when we have a resistance level, a clear resistance level, as well as a support level here, right, you can observe this support level, for example. There was a strong support level that price tested multiple times. What happens is that price could push beyond these levels, right, or these areas of liquidity before reversing. So you can observe that and go, right? You can see that when there is a strong support level, there was a support level that price tested twice, right? Once over here and the second time, right? For reversal to happen, right? Price push slightly beyond this level before it continues to the upside. And when that happens, right? So when it starts taking out liquidity, which is in the form of support and resistance, right? So at every point in time, if we have a support and resistance level, let's say this range here. So I'll just explain roughly what liquidity means, right? So for the benefit of those who are not familiar with this, right? So just imagine if prices are ranging, right? You have a support resistance level that price is testing. What happens is that at these support levels, right? Generally, you have two kinds of traders, right? One would be those that are buying at this support level. So they're placing buy orders here. Now, if you place your buy orders here, and what happens is that this buy orders would come with a stop loss, right? So if you're buying in this position, and you could maybe think of it as if price breaks below this, right? You're wrong, you want to get out of the position. So they generally put stop losses slightly below this key support levels. That's the first kind of trader, right? Anticipating a bounce to the upside. The second kind of traders are breakout traders, right? Essentially waiting for a break of the support level to take a short, right? Or to sell the position. So if that happens, they will put sell orders here, right? So we're waiting for price to go through it, trigger that sell stop, and then price continues lower. So in this case, you can observe what happens, right? At this point, at every key support level, lying just slightly below the support levels are sell side liquidity. Why are they called sell side liquidity? It's because they can come in the form of sell stops for traders that are waiting for that breakout, or they could be stop losses, right? Or buy orders, sell orders for people who are looking to buy. So for example, if you want to buy here, or if the position is triggered and you actually hold a long position or a buy position here, and price goes beyond that, right? And it triggers a stop loss, that's when you will need to sell, right? To let go of the position essentially. So lying slightly underneath this key support levels are this sell side liquidity or this pool of sell orders. Essentially, you can think of them like that, right? And the converse is true, right? So when you have a resistance level here, it created a potential area as a target, right? So lying slightly above this, there would be buy breakout traders, right? Waiting to buy for price to go higher to trigger their buy stops. That's the first kind. The second kind would be people who are looking to sell, right? If they're selling slightly below this resistance, expecting price to push lower, then what happens is that they will put their sell stops, they'll put their buy stop losses or buy orders slightly above this. Right, so to illustrate that point, you can see here, right? So we'll hop onto the live chart and just observe price action just based on support resistance levels. So notice what we have here, right? At this point, where we have a resistance level. So you have a resistance level here, right? Notice what happened at this point. We have a resistance level that price tested multiple times, this area here. So you can see that this was a resistance. The first time we probably wouldn't have caught it because we couldn't anticipate this move, but you can see that price moved strongly to the upside, tested this level again multiple times. We saw a slight retreat, and this retreat, right, could be an indication that sellers are coming in, right, to they're taking a short position or they're selling their position. And then what happens? Price just moves slightly above this area before the move to the downside. And you observe that here, right? So just wick slightly above this high, this area here, before it closes to the downside. So when that happens, right? So when liquidity is being taken, So liquidity again being taken just means that you have a support and resistance level that price respected multiple times, and then price just wicks slightly above that. And once that is the case, right, then we could anticipate that the support level would be a potential target, or the support level would be a level that sellers are looking, right? So if you're entering a position after price took out this liquidity and price continues to the downside, then this low becomes a target. And then when that happens, right, this is when fair value gap, right, would show the direction of the market. Right? So you can see here, when price wick to the upside and it continues much lower, right? So if the hypothesis is that we are seeing the shift of market structure. So at this point, right, if price is in an uptrend, you can see the higher lows and higher highs should still persist. But what happens eventually is that price breaks this low, right? So in an uptrend, you can see that the lows are generally not broken. And the same should be said for this case. In an uptrend, the lows are not broken, but what happens is that price breaks through this low, which is this area here. You can see that it broke through this low here, close to the downside. And at the same time, it also created a fair value gap, right? So if you zoom in, you can see that this fair value gap was created here, right? So this fair value gap here, you can see that there was this candle and this candle. Let me just put this in a different color so that's easier to observe them. Right, let me just highlight this in red, right? So observe this red candles, right? So this is the first candle. We have the second candle, which is a strong push to the downside, and the third candle. So this created a bearish fair value gap, right? And you can see what happened after is that price respected this area, this gap, before it continues to the downside. Right? You can see that price pushed back up. Once this gap is being created, price pushed up, tested this zone, right? And then it moved down to this support level here. So the one thing that I really want to bring across from this, right, is to understand areas of liquidity. You can see that once liquidity is being taken and there is a structure, right, a break to the downside, it created a fair value gap here. Then this is when you can see that this area, right, this fair value gap on the lower time frames, you might not want to take an entry just based off the 4 hours, right? Because this 4 hours, it's a longer period of time. You can go into the 1 hour time frame, for example, and observe the same moves. So the hypothesis or the clue, the guess is that if prices are bearish, you can see it will hold, right? And before price continues lower. And you can see here, right, when price starts pushing to the downside, you observe the move that we have, right? And what happens, right? Price push back into that bearish fair value gap before it continues much lower, right? Targeting this daily low. So that's the general idea here, right? So if we take a look at it again on another pair, right? Let's say if we take a look at it on DXY. So DXY itself, bring this up, right? So DXY, its dollar index, is a measure of a basket of currencies against the major US major trading partners. And so this is a performance on the dollar index. Right, so before I go on to DXY, just wondering if you guys have any questions. It's the explanation clear in terms of how you use liquidity, how you use fair value gap, just to give you an idea of where prices might be heading, right? Of course, none of it's 100%, but it's just using this as potential clues to help you gauge the general direction of the market. So if it's clear so far, right, we move on to dollar index, right? If not, if you guys have any questions, please feel free to put it in the chat box. Okay, so the next one would be on dollar index. You can see that on dollar index, right, especially for the past few weeks, we have been seeing weakness here, right? A strong move to the downside, partly because of anticipation that, inflation data is easing. And at the same time, right, US could be slowing, right? Especially with all these tariffs that Trump introduced, and also potential retaliatory measures from US trade partners. So in this case, right, if there is a slowdown in the US economy, or if the inflation continues to slow, then this could pave the way for Fed to cut interest rates, and that would in turn weigh on the dollar. So that's what we're seeing over here. You can see that the strong move to the downside, right? So on the weekly time frame, right, currently what we have on the weekly price pushing into this area. So we have a weekly fair value gap here. Again, this fair value gap, it's taken through these 3 candles, right? One thing I do want to highlight is that we are just highlighting key levels here. So this doesn't mean that if price push into this zone, we will see a bounce for sure, right? Again, if price pushes into this zone, we want to observe the lower time frames to give an indication that there is a shift in market structure, or if your bullish fair value gaps are being respected, right, for a move to the upside. Right, so these are just potential levels, right, where price could bounce from, but we always need to observe the lower time frames, right, for more clues as to where price could potentially be moving towards. Right, so we have a weekly fair value gap here. We have a support level, this support zone here, this region, right? So this level is about 102 level, and then this level would be the 100 level, also a psychological support level. So this area here. And this would be the 9102 region. Okay, so this is on the weekly time frame. It's also interesting to note that we have this area here. You can see that it was a previous support level. Price reacted at this zone, right? So if I were to zoom in slightly further, you can see that this was a support level. Price reacted before it just broke right through this level. Okay, so this is a potential level to watch on the weekly time frame. If we move down to the daily, you can see that this bearish momentum coming through here, right, just in forms of lower lows and lower highs. If you're not familiar with candlestick charts, you can move it to a line chart. So line chart, right, what you want to observe is just the swing highs and swing lows. So if you move the swing highs and swing lows, you can see that prices are still in this bearish move, right? Lower lows and lower highs. We have a low that is being observed right here. So recall we talk about movement to the downside. If we're seeing any forms of reversal, right, generally price could push into areas of liquidity. So this is a low that was being formed. You can see that price pushed to the downside. We have a strong move here, a support level before price pushed higher. And currently prices are testing this zone, right? It wicked slightly below this, but there is no indication of a trend shift on the daily, right, to show that it has the intention to move higher. And also, right, if you observe the resistance levels here, right, we also have a fair value gap here on the daily. So this area, right? So that's on the daily time frame. If we move down to the 4 hours time frame, this area here, you can see on the 4 hours again, it's more of an area of consolidation, right? So there's nothing much that we have, right? Just an area of consolidation, basically price moving sideways for this move here. You can see that there wasn't any shift in structure. And if you have to just highlight the highs and lows, this area, you can once again see that this is the last high that price formed, right? And it broke and consolidated around this zone, so it could hold below this, right? And if on the lower time frames, if we're observing some kind of shift in structure, oops, sorry for that. Right, let me go back to the candlestick. So if we're observing any shift in market structure, or if the bullish fair value gaps are being respected, right? So bullish fair value gap essentially just means that there is, you can see this zone, this area here, right? So this area, it was the previous resistance, right? Again, we talk about fair value gaps. We talk about comparing 3 candles as well as the wicks of this first and third candle. You can see there's 3 candles here. There was a resistance, price push back up into this resistance before that retreat. Right, you can see that on the 4 hours time frame. Very clearly here, we have a resistance level, price push into this zone. We saw that retreat to the downside before it continues higher. So if price continues to hold above this support, if you're seeing a close above this, this could be tested as a potential support for it to move higher into this daily supply zone or this daily fair value gap. Right? So if on a 4 hours time frame, we're seeing that indication, we want to wait for a clear market structure shift. So beyond just this price respecting this bullish fair value gap, we want to wait for a break of this last high, which is this high here, right? About the 104 region. This is the high, because this was the high which was observed here. Right? You can see that price formed lower lows and lower highs in a bearish market structure. So if that changes, right, we should see a break of this last high, which is at about the 104 region. So these are 2 clues that if we are seeing that coming through, right, if we're seeing this support level holding, right, this resistance level, which was a bearish fair value gap, price retested, and we're seeing a break above this. So if price closes above this level and it breaks above this, right, then there's potential for a further move to the upside, pushing into this daily fair value gap. this area here. Okay, so I hope that that is clear, right? So maybe using another example would help, or using gold again, right? Just the concept of fair value gap. Okay, so we have Bitcoin, right? So let's take a look at Bitcoin, right? Request for Bitcoin. But just before I go on to Bitcoin, right, I just want to bring that the same concept across Go, right? You can observe the same thing, right? The same patterns being played out here. So if you take a look at this, for example, right? Just now we talk about break and market structure. So the first point is that it has to take out liquidity, it has to take out a swing high, swing low. We have a break and market structure, and then that's followed by price respecting a fair value gap. So the fair value gap is basically, again, the distance between, you take 3 consecutive candles, and there is a gap between the first candle's wick, which is here, and the third candle, right? So it's not filled, which is why subsequently price push back to fill it, and then you target the low or high, right? Depending on whether the high is being taken first or the low is being taken first, right? So you can see the same thing, right? If we take a look at Bitcoin, so on the higher time frames, again, on Bitcoin, you can see that Bitcoin is sitting on an interesting level. First on the weekly, right? So on the weekly time frame, we have price pushing into this area here. You can see this zone. So again, you have a weekly fair value gap that prices are currently sitting on, right? You have that high, you have this low. You can see that there's 3 candles, right? So there's 3 candles that we observe. The wick of the first candle and the wick of the third candle doesn't overlap. So it created a gap, right? Price pushed in. We're currently testing this gap. Doesn't mean that price will rebound from here, right? Again, any form of rebound, we need to observe it on the lower time frame, because there's always a chance that price could just continue its bearish structure and break this zone altogether, right? So that's on the weekly. If you move down to the daily time frame, so on the daily time frame, you can see that prices are testing this within this descending channel, right? So for descending channel to be valid, we need price to tap the lower and upper bound at least twice. And we're seeing a test of this zone, right? We're seeing price testing this upper bound of the channel as well as the lower bound of the channel, currently consolidating around the zone, right? So that it's on the 78,500 level around here, right? This zone. And what's interesting to note here is that on the daily, you can see that on the daily, there is also a fair value gap that is being formed, that prices are currently testing, right? You notice this here, right? Again, we talk about first candle, third candle, right? So this area here, you can see that this is the first candle that we have, and this is the third candle. And you notice that the wicks of this candle doesn't overlap. That's why it created this gap here. So price pushed down into this zone. We're seeing a test of this area, right? Much consolidation around this area currently, this zone here, right? But nothing much, right? You can see here on the daily. So it's always about this kind of exchange of hands, right, between buyers and sellers. So if you take a look at this, you can see on the daily, the reason why we have that consolidation, at least from a technical perspective, you can see that on the daily, prices are currently testing this bearish fair value gap here, right? So I'm not anticipating a move, but rather I'm waiting for the market to show me whether price could break this level. If it breaks above this, it will retest this as a support. And if it holds, then it has the intention to move higher. But at the same time, right, currently it's a consolidation because we're in between these two, right? We're in between this potential support as well as this daily bearish fair value gap. Okay, so this on the daily time frame, right, it's more of an area of consolidation. It's interesting to note that price did not actually break and close below the last low, which is this area here. But at the same time, right, it has not broken above this high as well. So ideally, I want to wait for something like this, for price to break above it, retest as a support, and play a potential targeting this high here. Okay, so that's on the daily, right? Not much. It's really just an area of consolidation right now, right? I think this would be a key level to watch. If price breaks and close above this, then we could anticipate potentially higher prices. But if price closes below this, right, then it has potential to consolidate within this zone, right? So we're just waiting to see what market tells us. Right, so that's on the daily, right? So these are the 2 key levels for me. If price closes above the 82,000 level, we could see potential for further gains, right, towards this high, about 91,500. Okay, so I hope that this answers your answer your question, right, regarding Bitcoin, Terso. Okay, so with that, right, if there are no other questions, we have come to the end of this session. Yeah, you're most welcome, Terso. Right, so we've come to the end of this session. We are conducting these webinars on a bi-weekly basis, right? So you can sign up for them. We are also posting these recordings on YouTube, right? So if you guys have any questions, feel free to either reach out to us via the channel, or also just sign up for the session on a bi-weekly basis, right? You can reach out to your account managers. Right, so with that, right, we have come to the end of this session. Right, thanks everyone. At the end of the session, we also have a feedback survey form, right? So please help us to fill in the feedback survey form, right? Give us an idea of what you like or dislike about the session and how we can improve, and what are the topics that you would look forward to in the future. Right, so thanks for joining us, right? Have a great trading week, and we will catch you guys again soon.
Thanks all. Bye-bye.